Working with real estate investors is very different from working with conventional homeowners. And if you're a loan officer who understands what investors want, you can build stronger relationships, close more deals, and create repeat business. Because many investors are not just looking for the lowest interest rate, they're looking for speed, flexibility, communication, strategy, and loan officers who truly understand investment financing. In this video, we're going to talk about what real estate investors actually want from loan officers and how understanding this can help you stand out in the mortgage industry. First, understand the client. Some investors are brand new to real estate investing. Others own rental properties and have experience with fix and flips or construction projects. Understanding the client's experience can help you structure deals, communicate more effectively, and provide better guidance. Also remember that every investor has different goals. For example, a client purchasing a fix and flip property may care more about speed, leverage, and rehab funds than getting the absolute lowest rate. Meanwhile, a client buying a long-term rental property may care more about cash flow, long-term fixed payments, and prepayment penalties. Also, if rates are high, some investors may not want a long-term prepayment penalty. This is why presenting options is so important. Instead of assuming what the client wants, present different financing scenarios and let them choose what fits their strategy best. Next, let's talk about speed. Speed is extremely important to investors. Some properties are competitive, some closings are urgent, and some investors may lose opportunities if financing takes too long. Because of this, investors value fast response times, efficient processing, and realistic timelines. Many also do not want excessive back and forth or unnecessary conditions if it can be avoided. That's why organization is extremely important. Next, let's talk about screening. During the first conversation, loan officers should gather as much information upfront as possible to help create a smoother process. For example, if someone is refinancing a rental property, don't just ask about rent and expenses. Ask, what's the property address? What is your real estate investment experience? When was the property purchased? And what was the purchase price? How much have you spent on the property? What is your goal for the property? Are you planning to hold it long term or sell it soon? This can help you identify financing options early in the process. For example, if a property does not qualify for a DSCR loan, you may already have enough information to pivot the client toward bridge financing without restarting the process. Next, let's talk about flexibility. Some investor clients may not qualify through traditional financing, but that does not necessarily mean there are no options available. This is why it's important for loan officers to understand products like DSCRs, bridge loans, rehab loans, and construction loans. Also, options like private lending may sometimes offer faster closings, less conditions, and flexible guidelines, depending on the lender and scenario. Note that many investors are focused on timing and feasibility. Sometimes speed and flexibility are more important than obtaining the lowest rate. Also, think long-term with investor clients. Many real estate investors purchase properties repeatedly, refinance often, and continue expanding their portfolios. If you provide a great experience, communicate well, and are reasonable with costs, these clients may continue working with you for future transactions. Finally, let's talk about guidance. While experienced investors may move quickly and already understand the process, newer investors often need more education and support. This is where loan officers can provide tremendous value. Use simple language and explain the process clearly, especially with products like rehab loans, bridge loans, construction financing. For example, explain how rehab draws work, how funds are released, reserve requirements, timelines, inspections. The more informed and comfortable the client feels, the stronger the relationship becomes. At the end of the day, real estate investors often want loan officers who communicate clearly, understand investor financing, move efficiently, and help solve problems. And if you can become that type of loan officer, you can build strong long-term relationships within the investor community. If you want to learn more about real estate investor loan products, check out our books on Amazon and our loan officer templates on Gumroad. Thank you for watching.